Alright, this is going to be an interesting one. Rather than showing all of the big winners like a lot of people do here on YouTube, it's time to talk about some of the biggest losers currently sitting across my portfolio. So the start of 2020 has been quite the ride, especially if you watched my last video talking about the market crash that we're currently going through, or whatever you want to call it, as we kind of come out of this big bull market that we've been in for the past probably nearly over a decade. We've had those huge sell-offs in tech stocks and speculative investments, and including cryptocurrency too, which I will talk about a bit in this video as well. So let's go through each of these one by one, look at where we are right now with each one, what my plans are, and also maybe some of the lessons learned, because let's not forget, you're always learning when it comes to trading and investing, but that's all part of the fun, right? So let's start right at the top. This is in no particular order in terms of losses, but we're looking right now at the Global Clean Energy Fund by iShares. Now, as you can imagine, I got swept up just like everyone else did in the whole clean energy EV movement, especially since the start of 2020, as everyone knew and everyone thought that this is the direction that the world's going to go. Now, I think we know ultimately that the world will be going in this direction, but of course the problem is the price and the hype got things a little bit too hot and got things a little bit too heated. So this fund has had quite a pullback from its highs. Now, if we take a look at the share price and have a look at the price of the fund at the moment, what it's done over the past several years, of course, we can see that it was relatively flat back in 2019. And this one really only see itself got pumped from that March 2020 period. And then of course, a huge run up from around the kind of 450, 500 mark all the way up to 1200. Now, I had my eye on this one for a while, I remember, and I saw it dip down, I think, just below the 1,000 pence mark. And I thought, right, well, this is a dip, right? You meant to buy the dip, yeah? So I went in on that one, but of course, from then it's been a bit of a rocky road. Now I sit a little bit quiet. We're a little bit depressed now in terms of where we are. If we look into a little bit more details of the fund, of course, as a fund, it's got a collection of different companies inside the fund, all specialized in that global EV sector and clean energy. And now, of course, it will be no surprise if we look at some of the top exposures. Companies like Enphase, for example, are one of the top weightings, Veritas, Plug Power, and now a lot of these have seen a huge pullback from their highs. So if we just very quickly look at Enphase, for example, we can see again, massive run up, massive run up from the 2018-2019 period. Then all of a sudden 2020 strikes and some money gets pumped into the system, and then the share price goes completely ballistic. And it almost touched over 250 very quickly, but then has retreated back under the 150 mark. So what are the lessons learned from getting myself into this fund? Well, it's the usual stuff that ultimately we all fall trapped to, the kind of fear of missing out, that we see something going ballistic, we see it going the way up. We know this is the future, but of course the valuations and the companies that it holds wasn't really matching up to it. And I think in hindsight, I would probably look a bit more at the companies that this fund is holding and try and work out some intrinsic value of those companies, see which ones and how many are actually making a profit, for example, how many are more speculative. But at the end of the day, this one is still going to be a long-term hold. So my plans with this fund are to keep this for at least 3 to 5 years to see what happens. I personally have a lot of confidence in this sector, and I think it is ultimately the future. How long it takes to move us from fossil fuels to electric vehicles to clean energy is going to be the question really, and how quick that gets adopted throughout the world. But I think hopefully they've got the right companies that they need to do that. But of course, at the moment, we're seeing valuations all over the place. So fingers crossed, still going to be a long-term hold, but always some lessons learned about not jumping into things too quickly. Anyway, speaking of funds, let's have a look at my second biggest loser on the list. This is actually a fund I've been in and out of a few different times and made a profit from, but at the moment, my current holding is actually down. This is the Baillie Gifford American fund. It's actually a really popular one, especially on Hargreaves Lansdown. You'll often see it as one of the most popular funds. And again, this fund has done absolutely stonking stuff. It's had some great results. If we look back over the last few years in terms of charts and performance, we can see that this one's had an absolutely crazy ride from those lows of 2020. It's kind of trebled its way up, but of course is now having a little bit of a pullback, because if we just look at the kind of companies that it holds, we'll see exactly why it's done that. But yeah, if you look back at those returns, you can see why people have been flooding this fund with their money, because of course they want to get a piece of it. But let's look a little bit more in depth in this fund. We can see there is a net ongoing charge. The ongoing cost is 0.31, so not too bad at all. Of course, I'm keeping this one as my Hargreaves Lansdown account, so it's going to cost me 0.45% as an account fee on top of that. So it can get a little bit pricey. So if we look at what the fund holds, we'll see that it's a huge amount of these major tech stocks, which have had a huge run up. So look here, the top 10 holdings, companies like Shopify, Tesla, of course, are a big holding here. Moderna, Trade Desk, Netflix, Amazon, Cloudflare, Roku, Twilio. All of these have had a huge 2020 going into 2021, but have now had a massive pullback in the last several months. So of course, this one currently is sat red in my portfolio. So what about the lessons learned in this one? Well, look, we all know that managed funds and fund managers struggle to beat the market in the long term. This one, of course, had a pretty good record looking back. It wasn't just a one-off year, but unfortunately, I think as we've entered 2020 and 2021, we've seen that this fund has got probably too popular, if anything, and people have just been chasing those gains and then realizing that we may not see them moving forward. But long term, I'm still bullish on this one. I'm still going to keep my investment here. Again, I'm not a short-term trader, but it is a reminder that stocks don't only go up, and you will need to stick with things in the long term. And if this fund can actually beat the market, will be a huge test. Certainly long term it has so far, but moving forward, who knows? Next up, this is an exciting one, Deliveroo. So I remember investing in the IPO here. I got that email through, and if you might remember, if you are a customer as well, that Deliveroo allowed all of their customers to actually get in with an element of their IPO. So the maximum you can invest was £1,000 if I remember rightly. So I was like, oh, this is juicy. I wish they allowed me to get in more in IPOs. And as we know, IPOs last year went absolutely crazy with I think nearly 400 different investments. And I think last year was actually the biggest year for IPOs that we'd ever seen in the stock market, with over $140 billion pouring into different investments. Anyway, I put my money into the Deliveroo IPO, and of course, the price that I bought at, the initial price that it was listed for, ended up being about 40% higher than what actually happened. So I was losing money right out of the gate. I think at the moment it's actually my biggest loser in terms of percentage, but actually in terms of numbers and physical money, it's really, really small. It's a drop in the ocean. But it's one of those things that I'm not really bothered about selling. I knew it was going to be a long-term play. I still don't believe they're currently turning over a profit, if I'm not mistaken, and I think they're going to have to grow into their share price. Plans moving forward with this one, I'm definitely not going to be selling it anytime soon. I do think this space of those convenient deliveries has a lot of room to grow. And if you're going to be a leader in that space and have that platform, then you've got plenty of other things you can build upon that. Of course, we've all seen the likes of Uber going into Uber Eats, and then of course delivering you shopping as well as your food, as well as your taxi services. So if you can own that platform and have relatively low costs, and of course that gig economy space, then things should be pretty good from there. But you need to of course try and work out where you can make a profit, but the only way you can do that is by having a huge scale and a massive platform to build on. So I'm definitely not going to be going anywhere with this one, but lessons learned. As much as I tell myself I hate IPOs, I just need to stop investing in any IPOs moving forward. To be honest, luckily I do tend to avoid this space. Let things cool off, let things happen in the market. Too much marketing, there's too much hype around IPOs. Let them do what they want and then get in later on if the time is right and if the numbers look good. But this one was me just getting carried away in 2021. Very, very speculative. It's only a very, very small part of my portfolio. Although I do wonder if they allowed more than £1,000 to get invested, if I would have said yes to that too. Anyway, just be careful with that one. But look, we've had Donald Trump's SPAC. Of course, we've had Rivian, and these have all taken off and then of course come back down to earth. Anything that goes up just as quick can come down very, very fast too. So just remember that when playing with IPOs, very, very risky indeed. Now, another share which has done particularly badly for me at the moment, again, it's not a massive part of my portfolio, but as percentage loss and a swing that this one's had over the past few months has been quite incredible, and this one's Fiverr. So if you're not familiar with Fiverr, this again is a platform and website that allows people who are self-employed and freelancers to effectively show their services, and you can go there. Of course, you can get everything from website design, avatars, photo editing, video editing, etc., and pay people based on the job they do. Now, this stock is another company that's had a huge run up since we had the lockdowns and the pandemic. Of course, there's no real surprise there, as people were locked at home, more remote workers, companies were realizing that they could just freelance some work out, and especially to lots of people in countries that are cheaper, that they can get these services sorted. Now, unfortunately, since all the hype, it has cooled off just a little bit, and it has been one of those speculative stocks that's been hit significantly. So if we just look at the share price at the moment, we're sat around the $70 mark, but this did have a run up nearly all the way to over $320 at one time back in February 2021. Now, I got in after one of the dips, and I forget exactly where it is, but they got hit hard even in their latest earnings. And I think the problem with the company is quite misunderstood in how it makes its money. It's still not a profit-making company, but it does have a high gross margin, and all of their money is getting put back into sales and marketing. And actually, if you look through their sales report, if you look for their financials, you are seeing how they invest for the long term. So again, plans moving forward with this one. This is an absolute keep for me for the long-term investment. I think if they can build that platform and if they can build a huge, stable customer base, that they are going to see some massive returns because their gross profits are so high that they'll be able to keep those net income high as well, because again, they are just a platform to build on. So they don't have to worry about stock, inventory, or any of that nonsense. What about lessons learned though in this one? I think just like all of these, it's all about realizing that you do not have to rush. You know, the moment I saw that dip from Fiverr initially, I thought, right, I've got to get in here because of course I'm never going to get another chance to buy any higher, when in reality, who knows what's going to happen. In the short term, the price of a stock really can have nothing to do with the underlying fundamentals of a business. It's in the long term that we know that we should see that correlation as we move forward. So a lesson for me is to remember you don't have to be impatient, that you always have time to buy into a good company, let that good company shine. Of course, in the short term, who knows? And ultimately, if I was happy to buy the stock at that price, then why would I be happy to buy it today at its current price? So there's no need to go all in at one time. I can happily nibble in this one and dollar cost average down. There's nothing wrong with doing that, getting an entry point and keep going, as long as the fundamentals of the companies haven't changed. But anyway, for the time being, I get to sit on a nice juicy red number in my stake portfolio. But if you do want to join me on stake and get any free share for joining, then please use the link in the description below. There's 0% commission on all US stocks on this platform. Right, now on to the final one. Let's talk about my crypto portfolio. Now, if you watch some of my portfolio updates that I go through some of my crypto platforms, you will see that I have a fairly large chunk of cryptocurrency compared to the average person in the portfolio. I am definitely more toward the risky side, more adventurous side, and I am a long-term investor in this space, not looking to trade in and out at all and take profits. Now, I'll put up on screen now as we go through these how much potentially the gain has gone from when we did the last portfolio update, which I think was near the highs of the portfolio. And of course, cryptocurrency is extremely volatile, so be extremely careful. My holdings are mainly in Bitcoin and Ethereum, with the biggest weighting toward Ethereum in the long term. But let's just go through my accounts now and talk about any lessons learned. So BlockFi, you'll see here we have 18,000 in the account in dollars. And of course, that's made up from 71% Ethereum and 28% Bitcoin. In BlockFi, I do earn interest, which is quite nice. So I get paid interest around 3 or 4% per year with the asset that I've got here. So my interest on Bitcoin is paid in Bitcoin, and my interest in Ethereum is paid in Ethereum. This is an interesting one. I did see this one go down the other day. I think it touched below, I want to say about $17,000 or $16,000. It should really have worked out my exact cost base so I can track this. But I don't know if we're probably about break even now or anything like that. But long-term hold, who knows what's going to happen at the end of the day in this market. It's extremely risky. So you should only really get involved with money you're happy to lose. And from my perspective, if this all did go to zero, then it would just be one big lesson. But I think in the long term, there's some huge benefits in the space. Let's just jump onto another one of my platforms. So Nexo, again, I'll pop up on screen my previous portfolio update to see how much we're actually down currently. But again, it's just a loss on paper at the moment. This is a long-term hold. This platform, if I jump into the wallet, we'll see I've had some Bitcoin rewards, but it's mainly based in Ether and some of the native Nexo token on this platform, with a very small portfolio of Polkadot there as well. This is another platform where I'm earning interest. We can see I've earned $375 so far in rewards, and I keep this one ticking over. Really, really easy platform to use. All of my crypto links will be in the description below if you do want to get yourself started. It's very easy from a UK perspective to also get involved there. And if you're crazy, and I wouldn't recommend this at all, you can actually take out loans from your crypto as well. So you can see I've got a $4,500 credit line there that I can go on Blow and invest in other things, but I would never do that in a market that is so volatile. That is insanity. And finally, let's just jump over to crypto.com. So my third platform where I have my crypto. I like to spread my risk around. I think holding your crypto on an exchange in one place is definitely a lot more risky. I have considered before putting it on like a stick or having it on a cold wallet, but I'm actually going to risk it for those rewards at the end of the day. Stick with those trusted players in the market. So crypto.com, again, I'll put on screen how much we're down from when we did the last portfolio update, but this has been incredibly volatile too. Let's just have a look inside the account, see what we've got. So we have mainly Bitcoin in this one with a bit of CRO coin. I did get that CRO debit card, so I do get cash back every time I spend some money. I'd move some money occasionally when I go and do the food shop or whatever to try and get some cash back on that one, which is quite cool. And what else have I got on this one? A tiny bit of Ethereum, 39p, because I think I was using the supercharger feature on this one, which is when you put your money in and then of course you get a bit of reward for allowing them to use that liquidity. Interesting times in this space. Lessons learned and anything like that? Well, look, I was never going to do any short-term trading in the crypto space or make sure I get out of this one. This has always been a long-term play for me, but it is a reminder that it's so easy to get caught up when things are going in one direction. And the moment the market sees things going red, of course, we sell off as retail investors, but that is not something that I will be doing. And any money I put into this space, especially because it's highly unregulated and highly uncertain and volatile, I have no issue with saying that if this money went down to zero, I'm not bothered one bit. Of course, it will be a pain, but hey, that does happen. I'll probably make some good YouTube videos out of it. I'll probably have to make about 100 videos to get back any kind of money that I've invested into that platform. Anyway, look, those are my big L's. Please feel free to share some in the description below. The main reason I wanted to make this video is to say, look, we're all in this one together. We can all make mistakes. The core of my portfolio will always remain in long-term, broad-based index funds in things like the S&P 500 or any wider global markets. But outside of that, as a more kind of core satellite approach, I do invest in individual funds and individual companies as a speculative play, and I do enjoy picking stocks and doing that. Whether I can actually beat the market, of course, in the long term is going to be anyone's guess. Same with crypto. But please do let me know in the comment section below. Please let me know who your biggest losers are. I'm actually really keen to find out who has the biggest portfolio in the red, if that even is such a thing. We're all in this one together. Things are happening. No one's perfect. We all make mistakes, but nothing is a mistake really until you sell it. If you're a long-term investor, this doesn't faze me. But if you are newer and you see that, again, this might be a bit more of a reassuring message. Anyway, drop me a like if you found the video useful. Subscribe for many more. I will see you guys in the next one as always. But in the meantime, happy investing.